मैं हैदराबाद में एक इवेंट करने वाला हूँ 28 अक्टूबर शनिवार को 4:30 से 5 बजे तक। जो उधर मुझे मिलना चाहे वो नीचे दिए हुए जीमेल आईडी में और व्हाट्सएप नंबर में कांटेक्ट कर सकते हैं। hyderabadmoneypage@gmail.com उसका ईमेल एड्रेस है। मैं आपको हैदराबाद में मिलाऊंगा।
Hello guys, welcome to Paisa Bolta. Today, Alvin Malraj gets to going to another vacation. He took another vacation. No.
Oh, okay.
So in the middle of the vacation, he is doing a stream with us to give you some valuable information that three of the companies have given their results, have launched their results. So now we are going to discuss about the results,
Okay.
which three of the companies are major big companies in the FMCG sectors. The three of them are released their the three of them released their results. So now we are going to discuss about that. The first thing I have to ask is the net profits. When we see the net profit in their results, it is better that Nestle shows a large amount of net profit compared to other two. That is 37%. But we see numbers. When we get to seeing numbers, ITC stands net profit of more than 4,927 crores. So what do you think about it?
Okay, so with regard to Nestle, they might be a bigger FMCG brand in India, but then ITC, their predominant revenue comes from cigarette, tobacco business. Okay, nearly 60 to 70% of their profits comes from tobacco business, but it's a negative product, and the government has imposed a lot of taxes in this product. So what ITC is trying to do is they are trying to diversify into FMCG. They are trying to pitch into FMCG sector as well as hotel business. And now, as everyone know, they are trying to spin off the entire hotel segment because of high occupancy rate, and the hotel business is not performing that good comparative to the FMCG sector. So what Sanjeev Puri, the CEO, has mentioned was he wants to spin off the entire hotel business separately, and he wants to take it like Indian hotels and other hotel industry that's already listed in the Indian stock market. So it's the move is very much welcomed by the entire shareholders, because each and everyone will be getting one ITC hotel share for every 10 shares they hold in ITC. So apart from that, this is the first quarterly report that they have released after this announcement. This announcement was made in August, and after that, this is the first quarterly result that they have released. And going by the numbers, they have earned nearly 4,927 crore as net profit in the current quarter, and the analysts have expected some 4,950 crore. So the expectation and the reality is just a gap of just 25 crores, and nothing much difference is there. But the net profit has increased by nearly 10%, whereas for HUL, Hindustan Unilever, their major rival, and they are in a better position in compared to the market cap. As per market cap, HUL, tell me.
Yeah, sorry to interrupt. I have a question. That when we are speaking about ITC and Nestle, there is another big company called HUL, which also released their result. So they are hanging in between the Nestle and ITC. What is your review on it?
Okay, so with regard to HUL, the net profit has increased only by 4%, which sums up around some 2,717 crores. So HUL in India, they have only a few products. They have like personal care products. They have certain products. They have some food and refreshment products in India, but their basket of products is much more across the globe. And their parent, as you all know, is Unilever PLC that has been incorporated in the UK. So for us as an investor, that too as an Indian investor, we used to concentrate only on ITC for now, because HUL and Nestle, their parents are in abroad, and they have to pay a royalty out of the turnover that they are making. For example, HUL is paying around 3.45% of the turnover to their parent company Unilever, and same way Nestle is paying around 4.5% to their parent company. So a major chunk of revenue goes to their parent. So we can suggest that if investors are looking forward to invest in HUL or Nestle, they can try to acquire the shares abroad, not in India, because the revenue that they are earning in India is just going to the pockets of the parent company, and that's what is happening till now. But for ITC, their major chunk of revenue is given to the shareholders. Like the payout ratio is more than 70 to 75%, and they are giving handsome of dividend. But for the last 5 years, there is no much share price movement in ITC. For example, during COVID, the share price was between 50 to 100, and even I was just looking at the numbers for ITC share price. In May 2021, it was trading at just 198, and for a long time, it was trading at in between 200 to 220. And that time only, Anand sir was asking the audience to consider this stock ITC, which has a great potential because they are moving from the cigarette business, the negative business, to a positive FMCG role, and each and every FMCG product of ITC has been consumed by each and every Indian across the country. So it has a great opportunity in the future. And again, this company, the hotel business of ITC, is doing well post COVID. So that's why Anand sir is asking us to consider ITC compared to these foreign brands. And ITC, their major chunk of revenue has been coming from tobacco right now, but FMCG is also giving a great move because they are procuring directly from the farmers in our country. That's an initiative that has been brought up by ITC. It's known as e-Chowpal, which means the farmers can directly give their supplies to ITC, which is very much appreciated because they are helping the farmers on one end and they are making profit on the other end. They are getting raw material at a cheaper cost and they are making products, and they are, as an investor for us, it's a profit because last interim dividend also, the last interim dividend also they have paid for nearly 6 rupees like that. But HUL and Nestle, they are earning in India, they are earning from us, but they are pumping into the foreign parent company.
So I have another question. That is, Nestle is going to release launch its split as 1:10, I think so. So is it the right time to consider Nestle that buying one share will give us 10 shares with a worth of 2,500, I think so. So whether it is the right time?
No. Retail investors will just go by the numbers. They'll be like, okay, 25,000 rupees share, we couldn't afford it, but now it has dropped down to 2,500 and we can afford it. They are going by that. But as per valuation, even now, even after the split, Nestle is highly overvalued because their P by E ratio stands above 80. And for HUL also, their P by E ratio is above 55 or 56 like that. But for ITC, comparatively, the stock PE is just 27 until 40 for this FMCG sector is good. So it's right time to accumulate ITC. Whereas for Nestle, even though they are going to split the share as 1:10, the share price might decrease from 25,000 to 2,500, but the EPS is also very low compared to ITC, as well as the P by E is also very high. But as debt is concerned, all the three companies have very less debt, and ITC has just 0% debt. So no worries if you go for ITC, and the price to book for Nestle is above 80, and they are giving interim dividend as well. They have declared some interim dividend of nearly 140 rupees. But as I already said, the major chunk of the major chunk of Nestle India is owned by their parent company Nestle. So they are passing on the dividend predominantly to the foreign company, and it's the minor portion of the thing only is coming to the retailers. So if one is thinking of investing in a FMCG stock, they can very well consider ITC compared to the foreign brands. Even if Dabur or Godrej Consumer Products or Tata Consumer Products, if their price corrects in the future, even all the other companies mentioned some time back, these companies are trading at a higher valuation. But if their price corrects, one can really consider Tata Consumers, Godrej Consumers, as well as Dabur. But we have to wait patiently for that. Now we can just consider ITC for sure.
Okay, so it's nice talking to you, Arvind. We came to the end of the video. Okay, thank you for sharing your views.
Thank you, Keshav.
Thus, in the vacation time. So, thank you. I hope this video was informative and entertaining to you. So, hope you guys subscribe our channel. Please like, share, and do comment of what you think about Alvin views in this video. Thank you.
Thank you.